Always I will check. I think I tried when I went through the study guides and yeah, some of your material to check what should be your objective of that. So normally I coined that as what is expected from you. You guys need to be able to understand the background on companies, the Companies Act. IFRS, it's called the International Financial Reporting Standards. What I want you to be able to do that, I've got in red, be able to record accounting entries. So once I get your full attention there, we're just gonna be smiling going forward. So we're gonna try to make sure we put the emphasis on this recording, because all the calculation, you'll be using the calculation page where you write down. Once you've done with whatever you're trying to calculate, eventually it needs to boil down to this. Accounting will be about recording that accounting entry. Much as they will mark your calculation, but once you do that, yes, we say now you are a competent assistant accountant. Okay, then you pass, then we'll call you an accountant. All right. Here, what I wanted to check on learning unit 1, I saw there was a couple of issues around the issue of capitalization of shares. In the last exam, what I think the lecturer asked me the last semester, please guys, I didn't add tutorial letter 103 as yet. What was there when I looked at it in the past was about reading. Please go through tutorial letter 103. I'll give you a second to write it down. I think it had about 3 or 4 questions in the last exam on things that came out of tutorial letter 103. So it's one of those things, say, I can't sleep at night. Take that tutorial letter 103 while you're still waiting to fall asleep, go through it. So that will be some sort of your novel to kind of read there. I'll see which lecture unit I'll try to squeeze in. I'm in the learning unit. Just to recap, I'll give you about 2 weeks to go through it. You can use it from this week, that's starting tomorrow. The other one, maybe we'll touch it base there when everyone is checked. Please keep check on that just to see if you guys experiencing any other challenges. It's just telling about the latest updates and yeah. But it came in an exam last thing, so that's the reason I'm bringing that up. Let's move right along. Know the types of companies. So knowing it's all right, it's not bad. Remember, we said we're going to understand, so you kind of have to have an idea when someone come to ask, should I open the closed corporation or a company or just be on my own? Your advice will come very handy there. Name the users of the annual financial statements. We'll abbreviate that as AFS. Yeah, let's touch base on this. What they had under the Companies Act and IFRS and how they are actually related. It should be able to describe what a company is in terms of the Companies Act. It says basically it could be described as an association between the persons that come work together with the aim of making a profit. And then it's legislated under the Companies Act 71 of 2008. So those that might be doing a bit of commercial law or so, they will be doing a lot of company transactions, a lot. The auditing 3 also focus on some work around Companies Act. But in accounting, we're just gonna deal with a couple of few things, especially in this case, on how we're going to account for those shares. The cap issue, I think this is as far as we'll go from the learning unit 1. Let's look at the IFRS. So accounting basically is governed by that standard. It's got the accounting standard. We name it the International Financial Reporting Standard, where once you get into that, it will tell you how you need to account for inventory, how you need to account for property, plant and equipment, how you're going to account for investment property. Those are the assets you'll deal with that. And lastly, maybe how you're going to account for your financial instruments. That is covered by the accounting standards. On the IFRS, you're gonna do about 2 this year. You've got that revenue standard, the IFRS 15. You're also gonna have the leases, the IFRS 16. So those are the kind of standards you guys going to deal with that. So they are governed by that IFRS. Okay. So far, nothing much on that to say what really is expected from you. It's about that how you're gonna deal with your day-to-day transactions or any other events, how you're going to recognize things in the financial standard, how do you measure them. That's the things that you'll do with the calculation of depreciation. But now once you take them to the statement of financial position or statement of profit and loss, we call that reported in the annual financial statements. Planning Unit 1. I'm not sure if your first assignment had some sort of a share transaction. How did you fare there?
I actually get confused when, for example, our first assignment was like a quiz, right?
Yeah.
So you get amounts, ordinary shares, preference shares, blah, blah, blah. And then it says, and it gives you option, and then it says which of the following options of the shares that must be capitalized. Like, where do you start when the question is like that? And another one, there's the one of the underwriter. That one confused me.
All right. Did you get some time to go backwards and clarify that?
Please.
No, I'm saying, did you go backwards to try and reread, find out what's the issue, what's the improvement? When was the first assignment you wanted to submit?
It was on the. Let me just check.
Okay, check
it was
for me.
August.
Which one? That.
No, the 16th of August.
10th August.
Yeah.
We're almost heading to 10th September month. You cannot have such a headache a month later. We need to work on that. Let's hear the others. This is how we can run here, guys. You need to participate to unblock the focus stuff there.
I think the issue was just on the calculation. One of the things I became very aware of is the terminology. Well, I'm always aware of is the terminology in financial accounting that when not properly understood, you would fail to calculate certain things or to get to the right answer. So that is just one of the things I think I had challenges with in calculating the shares.
That's very true. I wouldn't agree more on that one. Yeah. The others? All right. What is a share? So in my business as a one-man owner, everything is mine. So here, if I decide to get a second person, then I'm no longer a sole proprietor, but I become a partnership with that person. We talk to say, hey, what are you bringing in here? Let's talk about those units, how we're going to share the profit. But when you move to companies, it's a different story. You get a number of people coming together to kind of share the capital of the company in smaller units. That equates to a share. So it's something that you cannot see or kind of understand at first, which it makes sense. But what basically got done that if say I'm holding shares with any of the listed companies, if they are there, I will be known to be a shareholder. I will be having given them the share certificates and. So on how the profits gets divided there, normally is in the forms of the dividends. If we in a company setups, that's how we can account on a higher level how the money or the outcome of profits that I'm getting from the company. So just note that with some dividends. And then when you look at the share capital, that is where you guys supposed to be more of the expertise now to say once you've done your FAC2601, we're gonna look at that. The share capital, those are the capital contributed by the shareholders to the company. So it will be known as the share capital. When I was referring to the Companies Act, the background there will tell you to say actually there will be authorized. So you'll tell when you just form that company to say this will be the authorized shares. So meaning you can ring fence the number of shares you could have in that company. Then from there you start issuing those shares. You could have either the ordinary shares. In the ordinary shares, you can have preference, as they would say. Preference meaning there's something special about that. You're moving along that thing. Then once the share capital of the company, what it does, it will be having that issued share capital. There's a way that you need to deal with that. You're gonna have the authorized, you've got the issued share capital. So maybe in this case, we're in the context of ordinary shares, meaning everyone ordinary. Then the other one is preference. There's something about them. And then what it happens is this is like the max number is referred as, this is maybe 10,000 of the shares we authorized to issue in terms of our memorandum of incorporation. So once you kind of work around this wording here to say, oh, this is where it's going. So everything comes from that last bullet there on the maximum number. Then the one that would already be either traded or out there in your financial statements will refer to that as the issued share capital. Then maybe you can still have something at the back to say for other rainy years, you might want to raise more money, you might issue more shares out. All right. Let's get to that. Let's just look at the recording first. Mateko had issues 100 ordinary shares at 180. So if I'm you highlighted that number there. I think I didn't use any highlighters here. Let's see what we can get. There you go. Ordinary shares at 180. Per share. So your accounting will say, journalize that, how to do that. We need to know when to multiply, we need to know when to add, to divide, and all those things. So yeah, when we've got the number of shares, normally we'll multiply that by whatever it costs to kind of get to the journal entry. That's that calculation. So on a separate sheet, normally on every question, how I used to be, I'm a very neat person. So where I'm answering, I don't do anything. I'm bringing that 180. But what I'm gonna do, I'm gonna refer the marker to say, please note where I've got my correct amount. Please go to C1 to see where I've got my correct 180. So all that I'm gonna show in my journal is at 1.8. I don't do a math. So don't be very scared to write, because you need to write very neatly, don't squeeze. So you'll get to that when you touch the exam technique. Write, leave a line, write, leave a line, so that you need to have a space. So if something that you forgot, you'll always have a space to come and write it. Okay. So please note, the authorized share capital is not equal to the issued share capital. They're never going to be the same. Because remember, the one is we need to always tap into the authorized share capital for whatever objective we have, especially if we hitting a snag in terms of our financial performance, or we don't have much money, we might decide to issue the share cap, or for any whatever reason, we're always going to refer to that. It's never going to be equal to the issued share capital. Let's look at our journal entry. Them will be very clear in terms of that there's the money that is coming into the business, but look at your credit entry. It's going to the share capital. So this just relates to the classification and initial recognition. The measurement, that's C1. How do we measure at it, at what it is currently going at? So what you see, it's this 1.8 in your financial position. So that will also be part of the financial position if we were to do the balance sheet from the journal. So now our share capital is recorded at 1.8. It's coming from that number of shares that have been issued. Say that it's okay. So normally this would have had happened prior anything else. So your financial statement will have been done with that. But what we're going to see in an exam is when now there are those changes from that first exercise we just dealt with. Now to say, remember you had this ordinary type of shares. What are they? They represent just an equity in the ownership of the company. And they'll give you the full voting rights in the annual general meeting as well as dividends. Then you're gonna get the preference shares. This is one of the other specialized one. Normally would have been there. It's just a bit of a luxury, if you were to call that, to have. So ordinary, we will live with it. But once you move here, it's also another special category of this thing. They always get the fixed dividends. It's capital appreciations characteristics. So yeah, you're holding them. So for some sort of better returns, if we were to call that for the lack of a better word. And then we'll get to the story on that. Just wanted to strongly concentrate on the, can cover that. There's no problem with that. The preference shares, normally they will tell the company this is how much dividend we actually want, and normally they're the one that gets paid them the dividends before your ordinary shareholders. If you don't have money of that, you'll recall a liability, meaning you didn't pay it out. So if you don't pay something out, you create a liability. I think I might have heard someone mentioning a liability there. That's the story of the preference share. So to go back to that thing, so that background was saying is preference shares are these are the special kits. If you don't have money, you're gonna need to kind of create some sort of a payables in your books. Say once cash becomes available, you'll bring back our money. I think the second slide wanted to check. You'll get them further to say cumulative preference, meaning they are cumulative. So you'll keep having to notice that. Every year, this ones they will have that thing. Whether you've got money or not, they will be entitled to the dividends year in, year out. Fixed preferential dividends, they accumulate. If it's not paid out, then I indicated earlier on that you'll create a liability for those ones. Another thing is if you to do the detailed books on that, if not declared or paid, they should be disclosed to that fact, is to make the users of the financial statement be aware how that. And then you got that second category on the preference shares. We call them redeemable preference shares. They provide for redemption on a specific date, meaning you can do something about it at that time. That's why it's redeem, meaning can be exchanged for something later on. Could be either the option of the holder. If that is the case, at the option of the holder, someone talk about a financial instrument, because something will need to give from the company's perspective to say, okay, how I'm going to handle that should that happen. We've created a financial liability there. That is, if the issuer has the obligation to transfer financial assets, meaning anything back to the holder. That's the characteristics on the preference share. As time, I think as soon as I see your assignment, we'll check and see more guidance on what else I will add on the preference share or what came from that. And then we'll try to check on the previous exam, how much more work was there on the preference share. But one thing I think I've seen in the past that they like the capitalization of shares. So another keyword for it, they refer to it as bonus issue. So don't be confused in an exam. When they talk about the bonus issue, they're still referring to the cap issue. I was attending another class for another module, UNISA lecturers, they really don't have the appetite to kill you. So if you had VETS UJ, you were most likely gonna see the word bonus issue. But they say no, you've got enough problems to worry about. They will stick to cap issue, but don't be surprised if they were to get a new lecturer for FAC, he might use the bonus issue. So the cap issue, let's see how we deal with that. So here the shares are issued in the same proportion as the existing shareholding. So we need to do that. So there's going to be a little bit of the maths literacy, arithmetic, mathematics. So there's going to be that little bit of having to work and go back to your maths, whichever it is, that you might need to kind of do and try to get it right. You see, try to get it right. So the getting it right is more important to say, oh, when the cap issue, this is what it does with that. We're focusing on the existing shareholding. So the proportion we're going to be using is the existing shareholding to say if there were X amount of these shares held at this ratio, once there's a new cap issue, we're still going to use the very same thing. So on the number of shares held that we have, so basically with the cap issue, you're trying to push, because remember, you're raising some sort of more money out of this exercise. So the number of shares will definitely gonna go up, but the value itself will remain the same. So you're not changing much, but there was some sort of a thing you were doing there. Call it some sort of manipulation, maybe for the lack of a better word. You'll see now with an exercise to say what we're really trying to achieve there. It's basically about that. Then in the issuing of these shares, the issuer will convert the reserves into the share capital. So there's another thing that we can play with. What do we use this to issue that? There's this thing called reserves under the statement of equity. We convert that into the share capital. Okay. And the accounting's job is there. Journalize, calculate. So you see these steps that before that assignment one, you needed to kind of have this background. But you guys were here on that fifth bullet. You wanted to be able to generalize to pick up the correct answer, isn't it? How do you do that? You know that you will debit the retained earnings account. Remember that fourth bullet, it says the issuing of these shares will convert the reserves. This is the reserves I'm referring to. And then what do? We push up our share capital. So when there's a cap issue, there's a journal entry going to two parts. I'm gonna do that through my retained earnings. It will go down because these are the reserves, the money that you've got there. And what you do, you push up your share capital. Any confusion so far? All right, let me give you an exercise since you say there's no confusion. This is an easy stuff, Molefe. Give us some work to do. Is it what I'm getting? That last one, it says capitalization of shares may be issued by utilizing the following reserve, will be the retained earnings. Let's get to it. That's the story. There's an issued ordinary share cap. COVID-19, 31st December 2020. We had the ordinary share capital, R1. Shares at 150. So once you've got that, you're thinking it means they had 150 shares. So those are the things. So each line when you do, you read that. What does retained earnings mean? It means these are the reserves that the company is having. So you're going to have the reserves here, you refer that as reserve, because information given, you need to understand it to know how you're going to deal with it. All right. 2021 on the 2nd, I don't know why we like using the 1st, because on the 1st it's a holiday in South Africa, and the 2nd it's a working day if it's not a weekend. The directors decided to make the capitalization issue of R1 of 1 share for every 3 shares previously held. Remember what we did there was that the shares issued should be in the same proportion as the existing shareholding. So in this exercise, we're picking up that. So let's get into that. Let's quick calculation. We've got 60 seconds to tell me the cap issue, how it should be done.
I believe here you'll be debiting retained earnings 50,000 and crediting share capital 50,000.
All right, how we deal with that? We start with your calculation. When you talk. How did you get it there?
Oh, okay. Well, calculations. I said
Yeah.
Excuse me.
No
The shares, the capitalization shares, which are at R1, and you get to capitalize 1 share for every 3 shares, which means that from the ordinary share capital, which is also at R1, which means our shares are 150,000 shares, divide by 3.
Divide by 3.
And then it gives you your number of 50,000 capitalization shares.
Okay. Is you correct?
Oh, okay. Thank you.
Thank you. Thank you for your attempt.
Yeah, I got 50,000 also. Your side, since the shares are valued at R1 per share, it means that the total shares is actually 150,000 shares.
Yeah.
So now, if we're issuing a capitalization issue at R1 for every 3 shares previously issued, that means the total number of shares will be divided by 3 to get the current value of the capitalization issue. Okay. So I got 50,000.
All right. Anyone with a different answer?
Okay, so how I went about it so that then I don't get confused in understanding. I think when you have a R1, it's easier to deal with. But then if it's if the issue shares were at maybe like a R3 or a different rand value. So what the principle I would have used would be to multiply the number of shares by the value initially issued at, divide by the capitalization value, which is basically 1/3, and multiplying that by the 150 shares to get to 150. I don't know if my principle of thinking is right.
Okay, let's see. Hold on to that. I'm seeing you guys all doing it slightly different. Hence, I was referring to maths late, arithmetic. That needs to be sorted out once you're dealing with that, because you're right. Should I not have R1? Things might get very tricky and comfortable. Let's see what you need to do. You guys dividing by 3, I understand it's an inverse of multiplication, but remember the proportion, what we spoke about it. Proportion will mean that, what is that existing? So for everyone, divide by 3. So you're missing this step here. You're getting it right by dividing by 3, but things could be other way around. So you need to be very sure that you refer to that proportion. So the proportion is 1 for every 3. Which you're right, because you're very lucky you got it to divide it by 3, but it needs to show this part, that 1 divided by 3. Of the existing shares, because remember what we had here earlier on, we said, oh, this means is, let's get a red pen, Meaning here, to get the number of shares, we had to divide this by 1 rand, as we are told, to get to this 150 number of shares that are in issue. So this part is very important. It might not always be 1 rand. Sometimes it will be 50 cents, 2 rand. So you need to be able, what you do with that figure here first, you start here. Divide that to get the number of shares first. Once that is done, you come to this proportion here, in this proportion. Which is 1, there is your 1 for every 3 shares held. Then the principle will be fine. Because once you move here and then now you're referring to this figure being different going forward. You need to master all these other principles before you're going to do that last multiplication. Is that helping you, Hukwet, to brush on your principles of understanding?
Yes.
Great. So we need to do it this way just to be kind of more comfortable. I know some people who might have not done mathematics for quite some time, but that will assist. And lastly, you will have passed that journal entry. Where do we do account it? We reduce. So in a financial statement, meaning my reserves will be reduced by 50 after passing this. So I will minus this for 31st December 2021 minus that 50K. So we will show 110. So you need to know what you are really doing where it fits in, because it's going down with the debit and my share cap will go up by 50. So here I will showing my share capital recorded at 200 if I were to do the financial position. So you need to know, what do I do with this information in doing my accounting? Any other questions?
Why are we minusing the 50K from the retained earnings?
Remember, I will touch that, bear that in mind. Remember the equity one, I'll share my rules hopefully before we go home today. Equity increase on the debit side, increase on the credit side and decrease on the debit side. When you debit, meaning you must reduce because this is sitting as a credit. That's something to write here. This is a credit. So you've got a credit versus a debit. So your opening balance was a credit. It's a good question. Thanks for that. Do you get it now?
Yes.
It's more, it seems like if you had an asset of 160, but you are selling that motor vehicle for 50,000, so you no longer have 160 worth of assets there because you've reduced that motor vehicle by 50,000. So it's the same principle. We'll get into that. That's good. The next question. Yes.
Yeah. Now you subtracting the 50,000 from the retained earnings.
Yeah.
So what do we now do with the balance in the account? The balance of 110,000.
That's what I was trying to explain. It goes to statement of changes in equity as 110. Remember, accounting, it's a continuous process. You don't stop. That was an opening balance when you start the year. So by December, I must do another book. So accountant, their work is to do the books every month, every year. To show what is the balance. The only time you stop doing accounting is when you go into liquidation and the doors are closed. You're no longer trading.
Okay. Okay, it only goes there. We don't need to show it in the journals.
But there is a journal we did. It will depend what the question was. So here I was explaining, remember here we just were required to do a journal. If you're to do the financial positions or equity, you also take that thing there.
Okay. Okay.
Thank you.
Thank you.
So normally, once you do, you start by recapping what we did. What we've seen was this two. You normally will bring that up. There was a cap issue. It should be done in the same proportion. Number of shares will increase. What else? You do the journal entries. The cap issue, you try to reduce the retained earnings and increase your share cap. All right. So that's more like your prep thing before you get to a question like this. So you start here to say, let me quickly recall. If you see cap issue in an exam, so what comes into your mind? Oh, this is what's going to happen. They might use that weight bonus issue. Fine if they didn't use it. What I need to do, the shares, normally they will tell me it should be done at the same proportion as the existing shareholding. I know my number of shares in this case will be increasing because you no longer have 150, but additional 50,000. What else? My journal entry. If I've got something on retained earnings, it's gonna go through retained earnings and increase my share cap. That becomes your pointer to say, okay, there's nothing wrong with the any cap issue exercise. There's an exercise. Let's go. July unrest, 31st December 2021. You highlight the dates. So you can have to use two highlighters. If you don't like, I don't know, underlining will take you time. Dates are very important. There's an amount. There's that question you're trying to highlight. What did I say about that? Once you see the rent, you link that. One, you need to calculate how many of these ordinary shares were issued. That's your work to do. It can't be me. Proceeds of 1.5 million shares in October. It came to that same thing here. How much this were ordinary shares issued at. Then there's an exercise. The following decision must still be recorded, meaning you have to do some work. When 31st December, what they are saying, there's a capitalization issue that must be issued to ordinary shares that were registered by 31st December. Can you see in my information there I've got October? So you need to say, is this person was registered by 31st October for those that were there in, do that. So you bear that in mind as well. In which ratio, very important, that proportion in 1 for every 5. But that cap issue needs to be done at 65 cents per share. What I want you to do, it's required. Required, you read them twice, always, so that you understand. I want you to calculate one, the rent value of shares that must be capitalized. Check the marks is 2 marks. So we need to get to say how much time you need to waste or spend on a question. It's 1.2 per mark. We'll get into that. So you take that, multiply by 1.2, so it's around what, 2.4 minutes. Let's go. Exercise, so you've got just less than 3 minutes. You're not asking question, you're writing it down. You let me see them. Once you're ready, you can post and raise your hand. Let's go.
I don't know if I'm correct, but I got 2 million.
Guys, remember what I said, my objective is to help you. If you don't participate and I ask you that. So when we go forward, no one should start to say, I don't know in answering. You need to be answering. What is it that we couldn't go? Let's go backward quickly. Because this is all that you need to master. The calculations will be different year in, year out. So that you shouldn't worry about how many you get right, but you need to master here. When I parked here, there were no questions whatsoever. There might have been few we tried to clarify. What is difficult? This is that part, as I indicated in my introduction presentation, say I'm going to help you to a certain point. So here what you're gonna work with your confidence. You need to always be giving the right answer, because that your answer is only me that can say wrong. So you need to start getting the way you say things. Communication becomes vital. So whatever you put down should be correct as far as you are concerned. It's only me that must say otherwise. In that sense, you're building confidence in the topics. I don't know if I'm making sense. The I don't know, I know you don't know. But you don't have to tell me. I should be the one correcting you because I know you've got a potential to know. So don't do things that will kill your confidence. What is it that is missing on those 6 pointer there? Actually, about 5. Patricia, I'm worried there because you might confuse the rate and that 5. Remember what I did in that previous example? I've shown the 1/3. Look at what if you did there. It's 1/5. I also need that. I don't know where you guys got the 5 million. You're confusing me. But what happened on the 31st of October? Remember, when was the cap issue? FU. Guys, your time frames. I'll have expected to see a time frame. Remember, we've got cap issue date. December 2021. There were ordinary shares. I check the group 31st October 2021. Do they qualify? Why not added? Thanks, Jonathan. So what's the total of number of shares we're dealing with here?
2.5 million.
How did you get that?
I said 5 million divided by 0.50 cents, and then I got 1 million shares for, yeah. And then I said 1 million plus 1.5 of those that were issued in October, and then they add up to 2.5 million.
Then you got, how much was it, $1 million?
The first one was 1 million, and then I added to the 1.5 that was issued in October.
You guys can check the chart to follow here. You see, when you answer question, you need to talk like this, that kind of thinking that what must go through. Just check my chart on what I've got. So there's a question you do before. So, because as I remember, you need to learn and be able to think, then apply. So there's a little bit of thinking that you guys don't want to do.
Yes, I'm here. Hello.
Are we correct in number of shares? I'm seeing yours at 2.3 and ours are 2.5. Which is which? How do you get to the 2.3?
I'm certain that mine's 2.3. I took 5 million. I took the given 5 million rand issued shares or shares, and I divided that by 0.5050 cents, which gave me 10 million ordinary shares, and then I took the given proceeds of the 1.5 million shares, which gives me 11 million 500,000 shares, and then I times that by.
Please type that on the group. I think you missed me. Can you see when I'm saying I need details? I couldn't see that 11 or 10. Is it 5 million or 5,000 or what? So we could be very wrong in calculation.
I think I missed a zero there. Sorry, whilst I was typing. I'll correct that now.
That's correct. Can you see what happens? That's what we mark. That's the class. I want you to be comfortable with your own mistake.
Okay, thank you.
I'm not sure if Mpo that was reading or leading me with the 1,010 million. I don't know. The rights and the wrongs we need to correct. Does it really make sense, guys? Are you becoming comfortable with this approach I'm trying to adopt to assist you? Because you'll attend all my classes, but if you don't participate and then I'm not pushing you where you should be, then I wouldn't be doing justice to you to be here in the morning. And for those who haven't even said anything on the group or raised their hand, you still owe us. You can't drain us. Thanks for being brave.
May I please ask a question? I just want
Sure.
to find out if Jonathan's principle is correct. Sorry, maybe I missed something. Because I think I used the same principle where I divided the 5 million by the 50 cents to get to 10 million.
That's correct. Is it a 1 million or 10 million? Let's get that one right. So that you don't make that mistakes in calculation, guys. They make the huge difference because it's 9,000 difference. So let's all plug our calculator. Okay, let's do that first step. What do we get? 50 cents in this case divided by, the 5 million divided by 50 cents. So we should get correct. All we must get the same number. Take the red one. What is your calculator giving us, Greg?
That's 10 million.
The 1,000 ones, someone that was leading me with 1,000, meaning we are incorrect. So it's 10 million by the look of things. Can anyone get it at 10 million? In number of shares. It's not 1 million.
It's 10.
Everyone else is 10 or 1?
Yeah, it's 10. 10 million.
Can you see that? But you don't stress in an exam. You make that mistakes, we'll mark you. We'll know that, oh, there was that zero that gave you dear Makar. But now if this question was in a multiple choice, you'll see, but these numbers are way awkward. But meaning you'll have wasted time because you'll be outside the 2.3 minutes to correct that. Just be careful when you work. What you garbage in must make sure it's correct so that you can get the output correct. So it's 10 million. So what is 10 million plus 1.5? So meaning we must get this issued share October.
That would be 11,500,000.
It's 11,500,000. Can you see the difference? Because we had a million that came to 2 million and 2.5 because of these zeros. So the total should be 11. So I'd like to strongly believe Jonathan is coming at the right thing. Can you see that? Simply because by October, these shareholders were there. And then this cap issue happened 31st December, meaning you add that to those that didn't add it. So it's few of those one. I think one of them is if you did that, you might have not seen that 1.5. I don't know what calculation he did there. FU, why did you get that 1.5 divided by 0.5?
Oh, my bad. I think it's a mistake. It's supposed to be divided by 1 over 0.65. No, for 1 ordinary shares for every 5.
All right. But you guys see where we start. We start on top. We take that first ordinary share so that you need to understand what is this for. That 0.50 cent. It needs to help you to say, hang on, with this, I must be able to get my total number of ordinary shares that I had And then the proceed here, it's simple. They just given me the shares. So what is the total number of shares that I'm dealing with that? So that by the time you get here, you should be clear what happened on top. Because should you miss this part, then you are out. Nothing you're gonna get that. You're gonna go above 2 minutes. If you don't get here, this calculation on what needs to happen here, you are out of the game. By the time you get there, it's completely out. So you should be dealing with about 11 million shares. All right. Any other question on that? Because I want to unpack this principle nicely so that we can come all right. It was 10 divided by 5. You multiply by 1/5 katekani, so that you only multiply by 0.65. And that sounds correct. Let's get that. Can you see where I want you thinking? Your way should be fine, but don't blame me. You can only adopt my way to get you there. All right. Step by step. That is the first part I'm talking about. You don't have to ignore that. You need to know what's happening there. Because you don't want, after you hear want to calculate, you want to read back. As you read, this information becomes important. What is this all about? I need to be clear. What is this line all about? All right. So I'm dealing with that on my calculation. That first line on the required, there it is. That 5 million divided by 50 cents, it's 10 issued. Then in October, there were other ordinary shares in that. Then in December, I had about 11.5 million shares. There's that proportion, remember on my slides, I keep referring you to that proportion. I want to see that 1/5. This is how I understand the proportion works. I know you guys want to divide that by 5, but I don't like it. It doesn't make sense to me. You need to understand, because I've already got that in my theoretical notes. So you need to give in the same proportion, it's 1/5. Then you use the multiplication. All right. The cap issue, once you get that number, it comes to 2.3 of those shares. But at what rate? Remember, we were saying, what if it's not 1 rand? There's that example. It's at 65 cents per share. If we were to do the journal, it's debit, retained earnings, and credit share capital. That is what I had on the recap slide. So there shouldn't be any other question that comes from the cap issue that you guys should not be able to handle. Okay. Great. Any clarity? It's okay. All right. So here, what was I saying for those that will need, before you FU, just you keep changing that 1 rand. I think it's the very first one we did. You can use any other figure and just work it from there. Yes, you can go ahead.
Oh no, I'm fine now, and I was confused at some point, but it's okay now. I understand.
You understand?
Yeah, I was actually confused with the figure 2.3 million, but now I see it's the 11,500,000 multiplied by 1/5.
Great.
Yeah, thank you.
Camera phones, I'm hoping everyone has got that. You can take that picture there. I'm just looking at the time. You're gonna do one more time. Just take the picture of that screen. You just indicate to it thumbs up to move forward. you're going to practice that one more time. So I'm going to bring so much practice that it's very clear. So that when you reflect on that assignment, you said, I shouldn't have got that mark very wrong there, or that confusion. We're done taking the picture on that. Picture sorted. Can I move?
Yes, you can.
Sorted on my side, you can move.
Right. So in this exercise, remember the first one we did the rand value. Here you're getting me the number of shares. That's the requirement. Time you look at it. Why I'm bringing this question, they will be part of the multiple choice questions in an exam or even in a football question, but you need to stick to time. Let's tempted. Let's do it quickly. So we're gonna push until 9:58. Let's go fast. Once you're done, will indicate. I want you guys, when you go on the recording, check what I have. I think when I was starting the second presentation on the recap, the things that I put into my presentation are the things I want to see in your calculation. I'm not seeing that proportion, the cap issue that was done. Same thing with Tolagele. What was the cap issue there? Or is it me that it's seeing things that are not there? Because remember, the question is the number of shares that must be capitalized. And then part B will be say the rent value of the shares that must be capitalized. So when there's a cap issue, the issue of proportion, meaning the ratio of 1:3, 1:5, needs to appear somewhere in your calculation. Should you not get there, then your answer should definitely not close to be correct. Tolagele, I'm happy with the ratio. For all of you, I'm not sure about the 4.8. It might be correct. I'm saying I'm not sure as yet. I didn't do the calculation. I wanted you to practice. Quite that ratio, I think you left it out. Tolagele, that ratio. Sense on next week will tell us how did you end up with 9.8 when the rest were at 4.8. All right, guys. I hope I managed to assist. This is how we're going to run all these classes.